Hello everyone, this is the pre-market report video for today 17th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened in US market last night. We know last Friday already 3 of the top 5 US banks released the results and all the 3 banks dropped significantly after the earnings release. That's aside, now last night before the market opening, the remaining 2 banks Goldman Sachs and Morgan Stanley released their earnings results. First, Goldman Sachs beats the estimation. Their profit increased 51%, which in turn increases the stock price by near 1%. Whereas in case of Morgan Stanley, their full year net income dropped 18% to just 9.1 billion US dollars, which in turn pushed the Morgan Stanley price down by near 5%. In addition, other US fin companies also delivered mostly the subdued results. So bank earnings wise, it's more of mixed to negative, which in turn puts pressure on the banking sector. Second, Fed Governor and FOMC member Christopher Waller said that he expects the Fed to cut the interest rate this year, but he also strongly stated that there was no need for the central bank to cut the interest rate quickly as the US economy remains in good shape means. This statement affected the US market optimism for the interest rate cut to begin in March. As a result, it increases the 10-year bond yield to above 4%. On Friday, it closed at 3.93%. Yesterday, Europe bond yield increases the US 10-year bond yield to 3.98%. Now, this Waller statement moved it to 4.07%, which was the second huge negative. Third, because of the iPhone sales dropping, yesterday Apple offered a rare discount on its iPhone to compete in China. Hence, Apple stock dropped near 2%. We know Apple is the index heavyweight in all 3 US major index, thus it affected all the index negatively. Because of all those negativity, all 3 US major index ended in negative. In the end, Dow Jones down by 0.62%, S&P 500 down by 0.37%, and Nasdaq decreased marginally 0.19%. In case of VIX, it increased above 4% and moved near 14 from around 13. Because of this 10-year bond yield increase and the FOMC member statement made the US dollar stronger, which impacted the oil price on the downside up to 1%. However, the Middle East goods shipment issue kind of supported it. At the time of this video, WTI crude trading around 72 US dollars per barrel, whereas Brent crude is at 78 US dollars per barrel. Again, for the same reason, dollar strengthening and 10-year bond yield increase reduces the gold price by 1%. In terms of price, it trades at 2032 US dollars per ounce. Then for Indian ADR, it was a disastrous day. We discussed on last Friday in US market, Wipro ADR increased 17%. Then Indian market, Friday, it increased 7%. And Monday, it increased near 7%. Yesterday, all the Indian IT stocks dropped around 1.5 to 2%. Hence, overall, Wipro's increase in Indian spot market was just 12% in comparison to ADR increase of 17%. So, from that itself, we know in ADR, it's going to drop 5%. But in actual scenario, it was worse. It dropped 8.5%. However, one positive thing was Infosys haven't dropped that much. One of the main reason was on the Nasdaq official website itself, there was a statement that Infosys is named as one of the top 10 safe international dividend stock. To some extent, it kind of supported the Infosys stock. But the most worrying thing was about HDFC Bank ADR. It dropped over 6% due to its quarterly results, which in a moment we'll discuss in detail. Now, just price-wise at present, all the arbitrage advantage that HDFC Bank ADR got in comparison to Indian market so far was around 6 to 9% for the past 6 months is completely wiped out. So today in Indian market, there is a remote chance this drop may not happen at all since the arbitrage dollar premium just balanced like any other Indian stock. And there is a high probable chance today in Indian market, HDFC Bank price will build again those 6 to 7% dollar premium. In that case, we can expect HDFC Bank to crash around 6% in Indian market as well. Hope I'm not confusing. This negative HDFC Bank results also affected the ICICI Bank ADR ADR as well. Then about GIFT Nifty, because of this negative US market and bad HDFC Bank results, from about 22,000 till today early morning, it gradually dropped all the way down to 21,840. Here, yesterday at the time of closing, there was no premium at all. Thus, for now, GIFT Nifty is indicating the gap down opening of massive 180 to 220 points. So, those were the things happened last night in the global market. Now, let's look at the India specific info. First, about HDFC Bank results. If required, please pause and have a look. This is the HDFC Bank earnings preview, what we discussed yesterday morning. Now, I added the actual quarter results along with it in the bracket and in different color. In that, the net interest margin comes in line with the expectation and the net profit increased over the expectation. However, in case of net interest income, it comes near 3% below the expectation. So, the bank became more efficient than market anticipated. However, bank haven't grown big as expected. Hence, we can say this result as mixed, not that much negative like how ADR reacted to it, like near 7% down. Then, you might ask, why the ADR massive drop? To answer that, as of December quarter, HDFC Bank got the total of 8,091 branches that in the next 3 to 5 years, they want to increase to the total of 13,000 plus branches, which absolutely market hates it since it's a huge capital expenditure and not the smart way to expand, especially when everything becomes digital like mobile apps. Second, just now, HDFC and HDFC Bank merged after a huge struggle for over 2 years. Yesterday, HDFC Bank CFO announced that in the next few months, they are going to start the IPO process for the HDFC Bank financial business. So, this increased capital expenditure and playing the demerged game haven't gone well with the US investors. Anyway, that's my takeaway from the HDFC Bank results. Simply, their quarterly earnings is not bad, but whatever the CFO's future plan for the HDFC Bank is not good. About institution, for the second consecutive day, FII was net buyers. FII net bought for 660 crore rupees, whereas DII again net sellers in the net sold for 370 crore rupees. As a summary, US market closed negative and all the Indian ADR dropped significantly, especially HDFC Bank and Wipro down over 6%. In line with that, GIFT Nifty indicating the gap down of 180 to 220 points. Honestly, let's hope spot market will not react that much negative as GIFT Nifty and Indian ADR implies. If so, then it will show the domestic strength. Moving on, yesterday as per stock open interest, L&T Tech, HAL, Vodafone, HDFC AMC, Ashok Leyland, Bajaj Finance and Federal Bank and PFC got an increase in open interest along with a negative close indicates the short build-up. On the other hand, National Aluminium, Aditya Birla Fashion, Page Industries, Mahanagar Gas, Titan and ITC got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, Asian Paints, L&T Mindtree, ICICI Prudential Life Insurance, Oracle FinServ and IAFL Finance are the some of the major Indian companies' earnings results are scheduled released today. In terms of macro, early morning before the market opening, lot of Chinese data including GDP growth and industrial growth data is due. Here, both of them got the ability to impact the global momentum. Then, during our market time at 12:30 p.m., UK's consumer inflation and immediately after our market close, Europe's consumer inflation for December month is scheduled release. Then for US in the night, retail sales data, OPEC monthly report and industrial growth data are the important items we need to keep an eye out today. Coming to technical, yesterday Nifty experienced a mixed market dynamics. In the first half, buyers supported the Nifty and in the second half, once Nifty hits the new all-time value, then sellers took control. Thus closed 65 points down. Hence, on the daily chart, Nifty formed a bearish spinning top candlestick pattern with a probability of a bearish divergence and largely traded within the Monday's range. And also, the hourly momentum indicator has triggered a negative crossover indicating loss of momentum on the upside. Hence, Nifty is likely to consolidate further in coming days, but as long as it holds the support at 21,800 to 21,750, it got the higher probability to move higher once the consolidation ends. And for the upward movement towards 22,300, Nifty has to break out decisively above the 22,150 mark. On the downside, the immediate support is located at 21,950 and a clear break below this level could trigger further correction towards the 21,800 mark. In case of Bank Nifty, it also snapped 4-day uptrend and closed 33 points lower. Thus, on the daily chart, it formed a doji candlestick pattern indicating a indecisiveness between buyers and sellers. Still, yesterday the trading volumes was above average and Bank Nifty did close above the downward sloping resistance trend line for yet another session. Technically, this is positive, but with the HDFC quarterly results impact, not sure about the positivity. On the lower side, immediate support is at 47,800 to 47,700 zone and a break below the level could intensify the selling further downside. Moving on, as per the weekly options data, the maximum call option open interest was at 22,500 strike, followed by 22,100 and 22,200 strike, with meaningful new call option writing at 22,200 strike, then 22,100 and 22,000 strike. Thus, the options data suggests that 22,200 will be the immediate resistance. Then on the put front, the maximum open interest was at 22,000 strike, followed by 21,500 and 21,800 strike, with new put option writing at 21,300 strike, then 21,500. Hence, it indicates the immediate support at 21,800 and then 21,500. Just one more thing, on Monday, the put call ratio hit the 6-month high value 1.52. That now at yesterday closing dropped to around 1.2 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any decision based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.